All right, what's going on, everybody? It's Eric here with Traveling Trading, back at it again with another video for you guys. Um, and in this video here, what we're going to do is talk about taxes and crypto and some tax saving strategies. All right. Um, so I know this topic here can be a little confusing and emotional, for many people. So I'm going to try to make this video as simple as possible for you guys to understand. Um, I got great feedback about the other videos about how to day trade and also about, taxes in general for other stuff for day trading. So I figured I'd jump into the crypto space here about taxes and kind of cover that with you guys. So I appreciate the feedback. I'll have a lot more videos coming out for you guys free of charge. I just want you guys to learn, as much as you can and, benefit yourself as much as possible. Okay. So understand, of course, this is not financial advice. This is for entertainment, educational purposes only. If if you see something that applies to you, you have any questions, definitely let me know. I'll be more than happy to try to answer them as quickly as I can for you. Free of charge, no charge, and um, that it's for you to utilize there. Okay. So of course, I can't say that I'm not a financial professional. For those of you who've seen my last videos, you know, you are speaking to someone who is certified and licensed to deal with the IRS when it comes to tax situations. And I'll show that as well too, how you guys can prove that. If you didn't see the last video, I'll show you here that you're not talking to just some random person. And a lot of people ask me, well, what makes you, a little bit more different to talk about crypto as opposed to any other tax person or someone who deals with tax and things like that? Well, for one, I've been around in crypto, probably most people you deal with in the IRS since 2011. Before you guys probably even knew about crypto, I was already in it. So I would probably say I'm a little bit more knowledgeable in the subject than most professionals um, that deal with it. I'm not, throwing shade on any other, tax professionals. I'm just letting you guys know, general public, that I know what I'm talking about because I've been in it. um, and not only that, I'm still in it. I, operate a few Bitcoin ATMs. Um, so if you know anybody who wants a Bitcoin ATM, holla at me. I got you. And also run full nodes. So I'm well versed in the crypto space when it comes to this stuff. So probably a little bit more than your usual accountant, especially more than probably like your local tax preparer in person at a franchise. I'm not going to name anyone in particular, but just know I know what I'm talking about. Okay, so keep that in mind. Um, so yeah, so let's kind of go over, my credibility for those of you who question it, because a lot of people, will tell you on YouTube personalities that, of course, like I said, they're not financial professionals as an advice, but I'm telling you that, I know what I'm talking about, and I'm going to show you guys just exactly how I do that for those of you who haven't seen the other videos. So let's start with the IRS part. Eric, what makes you authorized to, speak about tax situations and taxes? Well, one, my education and background is in accounting and computer science. For those of you who don't know in the last video, I've worked at various different tax firms. I've owned a tax firm, um, different stuff like that. I don't do it as much anymore. I don't run my firm anymore. I do still have private clients I, help out with tax situations. Um, but I enjoy being an entrepreneur more. I'm a little bit of a renaissance man, as you guys can probably tell that I, own various different operations that generate my income that allow me not to have to run a firm and have to deal with headache like that unless I want to, which is why I have private clients that I deal with when I want to. So yeah, so let's kind of walk through how I can show you guys that I am fully capable and knowledgeable on tax situations dealing with the IRS. So how do I prove that to you? Easy. So you guys are familiar with the IRS. You can simply look up my credibility by going to the IRS website and pulling me up like you can do any other tax professional you want to and probably should do. Now, this is not to throw any shade for people who go to places like, H&R Block and stuff like that and local tax preparing franchises. Those people are fully capable of preparing your taxes more than likely. They do study, have certain hours that they got to complete in order to, be authorized to do that. And also, too, the company is liable. So a lot of preparers may be doing, tax stuff underneath the company's, um, credentials, and that liability falls on them. So what am I talking about? How can I look up tax professionals who are licensed or, you know, authorized to talk about IRS situations and have the knowledge? Well, easy, guys. You can go to the irs.gov/p10-information and-the-freedom-of information-act. Anyways, it's the P10 Information Freedom of Act um, law, basically FOIA, that allows you to look up information, especially when it comes to dealing with us professionals. If you go to that website there, if you click on California, it'll pop up and allow you to download a file called a FOIA for California. You pull that up, and it'll give you the list of professionals that deal with tax situations and are authorized to kind of speak with that stuff. So if you pull that up here, California obviously is a big state. If you want to look up directly me, Eric Mullins, just type in like my last name, Mullins, Mullins, hit next, next until you find me. You'll find me right there. I am located in San Diego, California. There's my address. There's my company name, Mullins Money Management, blah blah blah, and all that good stuff. Okay, so there you have it. Clearly, I'm authorized to speak about this stuff. I don't have control of the irs.gov website. It'll be weird if I do, but again, you can go look that information up for yourself. Now, Eric, okay, we know you can, talk about IRS stuff. What makes you knowledgeable in crypto? Again, like I said, I've been in crypto space for a very long time, since 2011, before this stuff was even taxable. That's why I knew it was getting serious when the IRS started coming out with tax laws with the crypto. I was like, oh God, it's about to get big. And pretty much ever since then, I've just been holding, whenever I could, and trying to dollar cost average and whatnot. So I've been in this space a long time. I've seen it evolve from nothing to what it was being used for beforehand to not being used for now. And we're not gonna get into all that stuff. But anyways, so yeah, so like I said, I run a few Bitcoin ATMs. Eric, how do we know that you're a Bitcoin ATM operator? Well, for one, I keep one in my house for people who want to buy, some crypto while they're at my house. Oops, sorry about that. And I'm gonna show you guys here in a second. And I also run a full node. So let me show you guys here what I'm talking about. Sorry about that. Been day trading today, but here's my Bitcoin ATM. Well, one of them, anyways. Don't know if you guys can see that, but yeah, that's my Bitcoin ATM. You can, click on it and download some, scan your wallet and buy some crypto off me if you wanted to. That's just one ATM. I've got them located in different locations like convenience stores and stuff like that. So again, if you guys know anybody who wants some, let them know. And like I was saying in regards to running a full node, there's my node. I don't know if you guys can kind of see it. If you don't know what a node is, I'm not going to explain all that stuff to you. You can look that up on your own time. We're here to talk about crypto and taxes. Okay. Um, but basically, let's go ahead and get into it. Now that we got the credibility out the way, again, guys, I kind of know what I'm talking about. I'm not going to say I'm a genius in this stuff. I just know a little bit. Okay. Enough. I know not as much as, you know, coders and, people who write stuff for crypto, but I know more than just your average Irish professional who has no idea where crypto even came from. Okay, so let's kind of get into it. All right, so crypto and taxes. So today's objective, guys, what I want to do here is, going to talk about crypto and taxes, of course. What we're going to do is talk about how it affects you as an investor and as a trader. We're going to talk about different strategies that are there that you can use to save you some money. We're going to talk about what you can do if you owe a lot of money from trading. And we're going to talk about what might be best for you going forward as well too, in addition to other things. So these are going to be kind of the main focuses that we're going to, touch on here today. Um, I'm trying to save you guys hundreds, maybe even thousands to just even have a consultation with a CPA, excuse me, or any type of, professional that deals in this realm. So that's really one of the reasons why I'm making this, video. I don't want this information just be only accessible to people who only have money. Okay. So if this is something that interests you, if this is, what you're watching this video for, stay tuned. We're going to do some recaps along the way so it can soak in a little bit for you and I don't run out of air talking. Um, so we'll do some recaps and jump back into it. But this will be, a pretty decent video for you guys who are interested in learning this stuff that I have here. Okay. Remember, what we're going to cover here is just for federal tax purposes only, not state. Every state is different. So if you, have any questions about state regulations, you can speak to like your local tax professional to see if they can help you out with that. Okay. All right. So get this question a lot, what locations tax Bitcoin? I know this graph is kind of blurry, but this kind of shows you all throughout the world how certain countries feel about Bitcoin and their sentiment towards it. This actually came from the Wikipedia page. You can look this up. This is updated as of August 2020. It's kind of the latest one I could find. Obviously, things change like they did a couple of days ago. I mean, it's ever-changing environment, but this is kind of like the latest census so far. Okay, so the place that you see that are, in orange, but I don't really see any much of orange, like a little bit right there, is taken as legal tender, and I think that's El Salvador. Um, don't quote me on that. I'm not like the best, geographical person. Um, and then places where you see that is green is permissive. You can, it's legal for you to use Bitcoin, which is, a lot of places. Any places that you see that are yellow, those are places where it has some legal restrictions on the usage of Bitcoin. Pink is basically where, and it has old laws, but Bitcoin is, it's not prohibited directly. They have old laws towards it, but it's not directly prohibiting Bitcoin. Red, of course, is just hostile areas who don't, they either fully prohibit it or don't allow it there. And then gray is just places where there's no data on it. Um, Seems to be a lot of that gray area in Africa and Antarctica. I might need to go move there. But anyways, so that's kind of what you're looking at as far as locations that tax Bitcoin. Okay. What we're going to focus on today is everything in regards to the United States tax law. All right. So get this question a lot, when are you supposed to be taxed and when you're not supposed to be taxed? Oops, sorry, is a question that a lot of people have. Um, so to kind of break it down for you, like we said, kind of pretty much what, according to the IRS, the way they look at it, um, in general, IRS kind of looks at Bitcoin as property. Okay. However, you really want to take a look at and understand the situation in which the cryptocurrency is being assessed for tax purposes. Generally, overall, though, it's going to be looked at as property. So a lot of times when it comes to those situations, you can refer back to the implications on property tax. Okay. So understand that there's more than one different way to tax crypto. You can tax it as income. You can tax it as capital gains, long term and short term. There's different ways to do it. So there's times where you're exchanging crypto for fiat money or cashing it out. That's going to be taxed one way. There's times where you're paying for goods or services, like you might use Bitcoin to buy a cup of coffee, purchase a car, buy a couch. I've seen people buy houses with it, things like that. Um, where that's going to have different tax implications. Then there's going to be times where you might be exchanging one currency for another. You might use Bitcoin to buy Ethereum, use Ethereum to buy Litecoin, vice versa. All these different ways to exchange one currency for another. And then there's going to be times where you receive crypto for mining or it being forked. That's another thing I do as well too. I mine right now. I mean, hash rate's been slow right now, but anyways, let's go ahead and kind of cover that. So you see that form 10, that form 8949 there. That's pretty much where you report like the disposition of assets that you have, which where you basically report your crypto taxation for the most part. So understand all that. Just kind of keep that in the back of your mind when it comes to crypto and how it is being taxed. Um, Now, for those of you who might have like brokers and stuff like that, your broker isn't going to give you a 1099 form, which a lot of guys are familiar with. Um, they don't give that to traders. It's supposed to, traders are supposed to disclose everything on the IRS, or face like tax evasion charges and stuff like that. But brokers aren't going to disclose, they're not going to give you a 1099 form on that. So keep that in mind. You want to kind of keep your own records as well too, if you can. So that's pretty much situations right there. I just want to kind of give you guys where we're gonna kind of dive into when it comes to being taxed. So let's talk about some non-taxable events. These are some of the events where you're not actually having to be taxed by the IRS when you're buying Bitcoin with fiat money. So if I'm taking, if I just got paid, you know, from work, and I go on crypto.com and I buy, $100 worth of Bitcoin, I'm not going to get taxed on that. Okay. Donating cryptocurrency to a tax exempt or nonprofit or charity, you're not taxed on that either. In fact, that's a deduction for you. We'll cover that in a second. Making a gift or a cryptocurrency to a third party, you're not taxed on that either. Transferring cryptocurrency between wallets, you're not taxed on that either. I mean, you got to pay fees for gas, but you're not taxed on it. Okay, so keep that in mind. Um, I know when this whole situation with being taxed by the IRS was coming out, I was wondering how they were going to do that because I'm like, man, I gotta pay transaction fees and I gotta pay taxes on it, but you don't have to do that if you're exchanging it between wallets, which is good. All right, so excuse me. Well, if you know now, like generally what things you're going to be taxed on, how do you figure out how much you owe? Again, you're going to want to have to look at the transaction itself and how it's going to be taxed. Um, so, of course, you can break that down in a few different ways. When you're cashing out your Bitcoin, it's either going to be considered a long-term capital gain or loss, which means you've been holding it for 1 year or more, or a short-term capital gain or loss, where you're holding it for 1 year or less than a year. You guys can refer back to the video. I'll put a link in the description of that I did about day trading and taxes. A lot of that stuff that I'm talking about with stocks refers to trading with cryptocurrency as well too, especially if you trade it multiple times, like I do, like I do. Anyways, so that's pretty much how you would determine when cashing out what you would have to pay on your cryptocurrency gains or losses. You want to, determine if it's a long-term or short-term capital loss or gain. And of course, those will fall into those tax brackets respectively, which can be anywhere from 0 to 37% currently. Keep in mind, guys, at the time of you watching this video, laws might change. I'm doing this as, what, this February 2022, okay? So spending my Black History Month educating you guys as much as I can. But yeah, so that's pretty much, something to keep in mind too. Now, with personal purchases, you figure out how much you owe by based on the cost of what you paid for the cryptocurrency minus what you paid for the purchase, or basically dispose of your assets, got rid of your capital gains. Okay, um, that could kind of seem a little confusing because you might think, you know, if it's property, they're going to pay capital gains tax on it. What you're doing here is you're taking the cost base of what you paid for the Bitcoin or the crypto and subtract that from what you paid for the item that you dispose of the crypto for. So let's say, for example, if I brought some, you know, let's just say I brought a phone. Sorry, I was trying to get my coin out to make it a little bit more easier for you guys, illustration purposes wise, but I can't even find my coin. But let's say you brought something like a phone. There it is. Let's say if you brought like a phone with Bitcoin, right? A $500 phone. At the time you bought Bitcoin, it was, you know, $400. I paid $400 for this coin, and I took this coin and I gave it to someone because they take Bitcoin, and I paid $500 for it. You're gonna take your cost basis in your coin. You're gonna take your $400, subtract that from the 500 that you paid for your phone. You have a capital gain of $100. Okay, because the item that you got was worth more than what you paid for the crypto. But you take your cost basis of what you paid minus what you paid for the purchase. You pay taxes on that $100. Pretty simple. And that amount will depend on your tax bracket. And then of course, exchanging cryptocurrency for cryptocurrency. Um, Same thing, taking the cost basis and subtracting the difference. Okay. Um, we'll go through some more scenarios here in a second to make it a little bit more easier for you guys. Um, and there's more other situations that we'll cover as well too. Okay. A lot of these images you guys will see will come from I think it's cryptotrader.tax. And again, the sources in this presentation I'm putting together for you is from a variety of different things. Information stuff though is mostly directly from the IRS. Okay. All right. So let's take a quick break here and recap what we got so far. Right now, we talked about the countries that make you pay taxes in crypto. We talked about what crypto was. We talked about when it's taxable, when it isn't taxable, and that's pretty much what we wanted to cover so far. So you can kind of get a basis mindset of when you're going to pay, taxes and when you're not when it comes to your crypto. If you need to revert back to any of the situations where you don't pay crypto, you can, or any of those situations where you do pay crypto, you can, just so you can kind of, keep an understanding of it. All right. So hang in there. We're going to get into the nitty gritty of stuff here in a second. All right. All right, guys, we are back at it again here. Let's continue on to this journey and we will learn a lot more. All right. So again, we talked about the different countries that you got to pay taxes in. We talk about when it's taxable, when it's not taxable, and then we talk about what isn't, what exactly crypto is. Okay. Now we're going to get into the nitty gritty of it, and we're going to go into a few different scenarios. Okay. So one of the first scenarios a lot of people ask, when you're taxed on selling, trading, and dispose of your cryptocurrency. Okay. Here's kind of a little example. Um, let's say, for example, Scott buys $10,000 of Bitcoin, and the coin went up to $12,000, and he decided to sell it. You now have a $2,000 capital gain, and you're going to pay taxes on that. Okay. Whether it's long term or short term will be determined by how long he's had the Bitcoin and when he sold it. Excuse me, time wise. Okay. Less than a year, short term rate max is 37% based on his income or the dollar amount. I think with long term is like 20% at the max that he would have to pay on that. Pretty simple. Again, if you want to look at the exact rates and stuff like that, go back and look at the video dealing with day trading and taxes. I cover a lot of that in there. This is just kind of a branch off specifically dealing with crypto towards that. All right. Now let's talk about times when you're taxed on, cashing out for fiat, aka money, um, how that affects you as well too. All right. So let's say Emma buys $1,200 of Ether and the value declined. Then she sells her Ether. She has a $200 capital loss. And remember, if you're not a day trader, don't qualify for MTM status, you can, deduct up to $3,000 worth of excuse me, capital loss every year indefinitely until it's all, absorbed. So that's a good little tip there for you to know if you didn't know, but you'll hear that in the other video as well too. So that's, dealing with a loss for you guys. Now we're going to talk about when you make a purchase, kind of like how I explained with the coffee situation earlier today. All right. Let's say, for example, you are, Taylor, and in 2014 she bought 5 Bitcoins for 500 bucks. A couple years later, she trades a Bitcoin in for a car that's worth $51,000. Yeah, Taylor made a capital gain of 500 or $50,500. Okay, so you got to pay tax on that, Taylor. Sorry for you. Hopefully, it's not a lot, depending on your bracket. But that's another good example you can use. The same thing would apply if you bought a house with that Bitcoin, a picture. It doesn't matter. Okay, the item itself doesn't matter. It's the actual transaction that happens. Now let's talk about mining. If you guys don't know what mining is, it's basically where you're running computer software, like a lot of people use the ASIC miners to actually mine Bitcoin. I'm not going to go through a whole section of all that. There's a whole something you can look up on your own. I'm mining right now. I'm up to like 33 bucks right now, but that's for the month. I keep withdrawing it. But anyways, um, yeah, I got to pay taxes on the coin that I mine. Sucks. Um, I think I'm probably going to stop mining soon. But anyways, so here's a scenario. Let's say Matt earned a whole Bitcoin through mining in his operation, right? At the time, fair market value of Bitcoin when he mined was $50,000. Matt reports $50,000 of personal income. So yeah, I got to report like $33 of personal income right now. Okay, because that's what it's worth at the value of that time. Now, I don't think there's any consensus on this because people, or I guess the IRS themselves, don't really understand how that part works. But the mining operation, um, Whenever you're mining, the value can fluctuate. I'm assuming that they mean by the time you take that coin and put it into an actual wallet is when it is taxable. Don't quote me on this. There's no IRS guidance on it, but that's what I'm going to assume. Not like if you're consistently mining and gaining income. It's not until you put it into the wallet. You're not going to be taxed on every single second that you're gaining income on the transaction. Hope that makes sense. Again, there's no stuff in that, um, but that's what I'm kind of assuming. Um, so yeah, that's pretty much how that works. Personal income reports on your tax return. Now, taxing on cryptocurrency, when you're exchanging it for currency, let's say John purchased $250 of Litecoin. It goes up to like 400 bucks. Then you trade it for Ethereum. You now have a $150 gain for transferring your currency. Okay, pretty simple there. Easy. A lot of this stuff is pretty easy, guys. Just got to think about the transaction. Now let's talk about NFTs. If you don't know what an NFT is, it's a non-fungible token. Basically, it's like data on the blockchain. The blockchain is actually on my node. I'm not gonna go through all that. Anyways, NFTs, guys, are non-fungible tokens, and they're basically units of data that's stored on the blockchain, like a digital in the form of a digital ledger that can be sold or traded. If you understand how Bitcoin works and why it was so revolutionary, you understand why so many people are making noise about the NFT space. Um, it's also why a lot of scammers are running there too. But anyways, so that's what a non-fungible token is. Kind of the same as crypto is reported on the form 8949, just like you would with any other capital asset. Now, when you sell an NFT, you got to pay taxes on the profits, same way, um, and the profits are going to be considered income at an ordinary income tax rate, which varies. And also, additionally, you can be subject to like self-employment tax as well too. And I talk about all that in the day trading video. You guys can check that out. But let's say, for example, Ashley buys, um, an NFT for 400 bucks. 2 months later, she sells it for 200 bucks. Now she can claim a capital loss on a return at $200. Okay. Um, so yeah, so your profit is considered income, or your loss is considered a loss of income, and you'll be subject to that tax rate depending on how you do that. Okay. And this right here is just kind of breaking down short-term capital gains, tax brackets, and all that good stuff. So NFTs are looked at no different just because they're NFTs. They're going to be still subject to the same thing as any cryptocurrency. Just kind of know that. They make it easier for you. Now, what about airdrops? So let's say Lauren airdropped Uni tokens worth $1,000. The value of the tokens increased to $2,000. She sells it for, you know, she sells her tokens and then she reports $100,000 in capital gains. Pretty simple. Airdrops are no different. If you don't know what an airdrop is, it's basically cryptocurrency um, that you're still liable for to pay taxes on, regardless of how the transaction is. Okay, so just kind of keep that in mind. Kind of fall that in line with NFTs and how it's taxed as well too. Okay, you can go look up the definition, all that good stuff later on if you want. What about hard forks? Get that question a lot. One of the favorite hard forks I like to talk about is Bitcoin Cash. So let's say this situation actually happened to me too. But anyway, let's say Megan receives 2.5 Bitcoin Cash, and as a result from a Bitcoin hard fork. Again, you can go look up the definitions of all this stuff. I'm not going to explain all that to you. I'm just going over the general aspects of this stuff here for you guys. Okay. Now the fair market value of Bitcoin Cash on that day was $1,250. You report that as your income. So let me kind of give you an example for me as well too. I went to this one event where they were giving out Bitcoin Cash, and I won $100 in Bitcoin Cash. Luckily, I had my wallet on there, on the phone. Boom, got it right then and there. I had to report that as income. It was only like $100, but I said to report that as income. Okay, so that's pretty simple. Ooh, sorry. Where were we at? Okay, Megan. Okay, boom. Now let's talk about being taxed through interest. Um, because if you guys don't know that, you can also gain interest on different platforms. Um, like BlockFi and Celsius. I use Celsius. I have BlockFi too. I mean, I have a lot of freaking crypto platforms. Doesn't matter. Anyways, Mitchell holds Ethereum on BlockFi and you earn interest of $150 in rewards. You got to report that as personal income. But the same thing would apply to if you did it with like credit cards and stuff like that as well too. I remember there was this one whole case where this guy made like 300 grand or something like that and didn't pay tax on it when he was supposed to. And yeah, that sucked for him. But anyways, that's it. So let's kind of recap here, guys. We just kind of talked about the different situations in which cryptocurrency is being taxed and giving you guys little scenarios of what to look out for when it comes to paying your tax on crypto. All right. So we're going to get into another section here. Then we're going to go through some questions and you guys will be good to go. You'll know everything you need to know about cryptocurrency and taxes. Okay. All right, guys, we are back at it again. Let's try to wrap this stuff up here. We're like halfway done. So we'll try to make this as quickly as we can. All right. So now that we kind of know the different situations, that arise where you have to pay taxes on your crypto, um, let's kind of talk about some issues that come up because sometimes, things aren't perfect, right? So let's try to get an idea of, little sample of what can go wrong whenever you are, dealing with cryptocurrencies. Some issues that arise for a lot of people can be, determining your original basis of your records and also trying to figure out things that you're going to be taxed on, such as like crypto loan interest payments. Okay. So let's kind of talk about the original basis and keeping good records. Because like in this example here, you have David who bought $10,000 of Bitcoin from Coinbase, and then David transferred it to BlockFi, the Bitcoin itself. He didn't transfer the money, he transferred the Bitcoin. Okay. Because of the fact that BlockFi doesn't know where that, how much that currency was at the time you paid for it, when they issue you your tax form, they don't know what the basis is of your costs for your Bitcoin when you originally, got it because they got it from the platform themselves. They didn't get it from your cat. They didn't get it from your cash. So let me see here if I can kind of break it down for you again. Let me do this. Okay. Just in case you might be a little confused. So here you have your cash. You took that cash and you bought Bitcoin. Your cash is gone. You spent $10,000 on it. Now you have your coins sitting on Coinbase, sitting there, accumulating money, sitting there, accumulating money. And now you just decided, hey, I hate Coinbase. I'm going to leave and I want to move to BlockFi. I'm going to take my coins, put them on the BlockFi. All right. BlockFi does not know how much you paid for that coin because at the time you send it to BlockFi, it was worth, $12,000. Although you bought it back when it was over 9,000. It's a Reddit joke if you ain't been to Reddit that long. But anyways, Vegeta meme. But let's say you bought it with $9,000, but you moved it over to you know BlockFi when it was $12,000. The IRS might try to hit you with a $12,000 capital gain when really it should only be like 3,000 because you paid $9,000 for it because that's your cost basis. That would happen a lot. That's why it's very important for you to kind of keep your records if you can. All right. All right, now let's talk about the loan interest payments. Because if some of you guys don't know, but there are programs or there's DeFi companies out there that'll let you take out loans against your crypto, but you got to pay it back with interest. Then of course there's staking and all that stuff. But anyways, let's say you took out a loan against your Bitcoin, you got to pay back in interest. Now with regular money and stuff like that, interest payments is deductible. There's no IRS guidance on the fact that paying back crypto is excuse me is deductible or has any type of tax implications. There's no guidance issued on that yet. I'm assuming there it will be since you treat it like it's kind of confusing because you're not treating it as a currency, you're treating it as an asset, but then all this other stuff can kind of get into question it. But anyways, as of right now, there's no guidance on it, so that can be a little issue that may arise if you try to deduct all this interest off there. The IRS probably they'll scan your stuff. They'll be like, "What the heck is this? What are you doing? You can't do that." There's no guidance on it yet, so you might get in trouble. Kind of how that works. And you got to prove to them that you can. But anyways, um, so a lot of people ask me this. Well, hey, what are some tax saving strategies I can do to help protect myself and save me some money? Let's take a look here at Amy's example. Okay, This is through tax harvesting. So Amy has $15,000 in a capital gain for the year, but she bought, and Amy bought $10,000 of XRP, and the value of the XRP went down to $2,000. Now Amy sells her XRP to offset the $8,000 of capital gains. So now her remaining capital gain is only $7,000. So instead of paying $15,000 in capital gain, she only got to pay $7,000. So that's what tax harvesting is: selling your assets to save yourself money. Okay. Um, yeah, that's just kind of one of them. There's plenty of different ways to, other ways to save money tax strategies wise. Like, when you form a company, things like that. There's also, deductions you can take. Again, for this video and time purposes, I'm not going to go over all that. You can go look at the go look at the day trading and taxes video that I'll put in the link in the description, okay? And you'll get the idea. The same way you're treating the stocks to be able to save yourself taxes, the same way you can do with the crypto, okay? Now this happens a lot, you know, especially for you people that hold. Let's say, you still owe a lot of money. Even after you did all your tax saving strategies and all that good stuff, you still owe a lot of money to IRS, but you don't have that money. Like you really don't. Or even if you did have that money, it would completely wipe you out to where it puts you in a financial hardship. What else can you do? Well, there's a few things you can do. Okay. Or you might even know someone who has this issue. They owe a lot of money to the IRS. Because this doesn't just apply to crypto. It applies to pretty much if you just owe the IRS, period. Okay. Brace yourself because this is a lot of information that a lot of people even pay just to talk to with like big tax firms with. Okay. So I'm saving you like hundreds of dollars right now just talking about this. The tax relief programs that are available for you um, as taxpayers, you have a bunch of them. There's like the conditional expense installment agreement, where they set you up on installment agreements to pay your tax debt based on your finances. Okay. There is a currently non-collectible status where you make like no money. Like if they were to put you into some type of payment plan, it would just literally crush you financially, and you would probably like, it just wouldn't work. Okay. Um, you wouldn't have a decent living if you were to contribute to make payments to IRS. So you have that currently non-collectible status that you can be put into as well too, where you're not having to make payments. All right. Then there's the offers and compromise, where you can, negotiate with the IRS to settle the debt for, a fraction of what you owe. It could be through a variety of different reasons why. Um, and if you don't know, you can also do this with your credit cards. I can make a whole other video for that, guys, if you want me to. Comment it below and I will. But anyways, but yeah, there's offer and compromise where if you owed $100,000 to the IRS, sometimes they'll just be like, hey, just give us 8,000 or something like that. We're not gonna get into all that. It could be a whole other video. Then there's like partial pay installment agreements where you can, partially pay some of it in installments. Um, a lot of times, if you still owe money, sometimes the money you owe is through penalties and interest and stuff like that. And there's programs for penalty abatements where you can, have those penalties wiped away. And it's once every 3 years. So I've seen tax professionals think that the penalty abatements only apply once. It doesn't. It's once every 3 year period. So if you don't know, the IRS go. I'm getting into a whole other subject. Anyways, just know that I'm not even gonna go over all that. Talk to your tax professional. If they don't know anything about it, get a new tax professional. Then there's stair step agreements, streamlined installment agreements, and then traditional installment agreements. Those are just different installments you can make towards the payment of your tax liability based on what you owe. So don't freak out if you get, $5,000, $10,000, $8,000, tax bill. If you're making an effort to try to pay it, the IRS will work with you. A lot of people get that misconception like, oh, I owe money, it's the end of the world. Trust me, it's not. It's not. So please share this video with someone if you know they're in a lot of financial trouble, whether it be with the IRS or even credit card debt, guys. It's just money. I mean, there's been stories like when people commit suicide, stuff like that, over how much they owe. If you understood accounting and how finances work, especially in this country, you'd probably be mad. Probably be mad that money exists. But anyways, just know that you have options. Okay, it's not your back's not to the wall. They're not going to come and arrest you. They're not going to kill you or nothing like that. I mean, if you're doing tax evasion, ask Wesley Snipes. But anyways, let's go on to the next thing. So we're gonna jump into these questions that I get a lot that you guys have either messaged me about, wanted me to cover, or or just out there in general. Okay, so I'm gonna try to answer these as best as I can. But again, ultimately, talk to your tax professional or financial professional when it comes to your particular situation. Everyone's different. I'm just giving you my 2 cents as a professional. So, one of the questions is, the 2020 form, they ask, during the time, have you received, sent, or exchanged otherwise any financial assets in any virtual currency during 2020? I purchased virtual currency with a real currency, had no other real virtual currency transaction a year. Must I answer yes on the form? 2020 questions. Let me make sure I'm comprehending this correct. They ask you if you received, sent, or exchanged, received, sent, or exchanged, otherwise acquired any financial interest in any virtual currency. He said during that year he purchased currency with real currency and had no other transaction. So basically, no, you would not have to report that. If you just went to like Coinbase or I don't want to say Robinhood because it's not real currency yet. They don't have the wallets out. But anyways, let's just say you went to your exchange and you bought cryptocurrency, but you didn't spend anything, you didn't cash anything out. You just bought it to have it, to hold it. You don't pay taxes on that. You remember you're only paying tax on a transaction when you purchase it, um, by doing like different activities. That's when you pay taxes on it. So yeah, that would be a no. If your only transaction was just that, you're not required to say yes. So next question is, how do I calculate gains or losses when I sell a virtual currency for real currency? Again, it's going to be taxed as a capital as it's going to be a capital gain or loss because it's looked at as property. Okay, remember that it's looked at as property. So you either have a capital gain or capital loss depending on the time of having that asset. Okay, pretty simple. Next question is, do I have income if I provide someone with a service? Do I have income if I provide someone with a service that a person pays me with virtual currency? Yeah, you do. Is ordinary income. So if someone paid you, like if you have a job or something like that, or just someone in general says, hey, I'm going to give you 0.005 Bitcoin if you go rake my yard. Yeah, that's ordinary income for you, buddy. Sorry. Does virtual currency received by an independent contractor for performing services constitute a self-employment income? Yes, sir, it does. And you got to pay your self-employment tax on that. So don't forget. You definitely want to keep, though, like a date of when it happened. Um, if you can't even narrow down to the time, um, because you're going to be taxed on the amount of what the currency was at that time you received it. Okay, so keep that in mind. All right, what's next? Will I recognize a gain or loss if I pay someone in virtual currency for providing me with the service? Yes, you do. Don't need to really kind of go into detail. You can kind of look at like the disposition of assets when it comes to that. I think that's like publication 544. But yeah, you do recognize the gain or loss. Sorry, my butt's getting numb here. And then the next question here is, well, I recognize the gain or loss if I sell or exchange property for virtual currency. Yep, same thing. Okay. One of my cryptocurrencies went through a hard fork, but did not receive any new cryptocurrencies. Do I have income? So a hard fork is basically, if, for those of you guys who don't know, a hard fork is when a protocol changes on a ledger from like a legacy distributed ledger. So it kind of like sometimes makes a new cryptocurrency um, on the ledger. But if your currency goes through a hard fork and you didn't receive any new currency, or even if it was like through an airdrop or anything like that, um, I believe so. Yeah. I- I'm trying to think about the situation of where you're coming from with this question because it could vary. Um, I don't I don't think you do. If you receive the hard fork and you didn't get any new currency, you wouldn't have to pay taxes on that because there's nothing to tax. You didn't get any new income. So no, you don't got to. Is this another question? One of my cryptocurrencies went through a hard fork followed by an airdrop, and I received a new cryptocurrency. Do I have income? Same thing, no. Are these the same questions? No, one is talking about just a hard fork and not receiving. One is talking about a hard fork and not receiving new cryptocurrency. The other one's talking about going a hard fork followed by an airdrop and receiving cryptocurrency and receiving a new cryptocurrency. No, you don't have income. You in that instance you may have a gain or loss, but you wouldn't have income. You're not taxed as income. Hope that kind of clarifies it. These two questions here are different, guys. Um, but short answer is no and no. And this one's kind of no and maybe. Again, see your tax professional. Next question is how do I calculate income from cryptocurrencies I received following a hard fork? Well, you're going to take the fair market value of the cryptocurrency at the time that is recorded on a ledger. Hopefully, you have that information. Um, but yeah, it's going to be based on the fair market value, not the cost basis, fair market value. So how do I determine my cryptocurrency basis I received following a hard fork? It's kind of the same question. One is asking for the income, and the other one's asking for the basis. Both of those are going to be determined um, based on the fair market value at the time. I think, yeah, I think so. Double check your situation, whoever sent me that question. That's probably going to be based on like publication 551 and the cost basis of an asset. Okay. So hopefully that answers that question a little bit more. But typically, I want to say it's fair market value for both of those. Oh, sorry. Where were we at? Okay. One of my cryptocurrencies went through a hard fork while we did that. So I received cryptocurrency through a platform trading cryptocurrency, that is, through a exchange. How do I determine the cost of the cryptocurrency's fair market value at the time of the receipt? Should be on the blockchain, to be honest with you. If you received it in like US dollars, I want to say there should be a date and time. So you're going to determine it based on that date and time on the ledger of an on-chain transaction. Hopefully it was an on-chain transaction. Common questions here. I received cryptocurrency in a peer-to-peer transaction, or any other type of transaction that involved cryptocurrency exchange that did not involve the exchange. How do I determine the cryptocurrency's fair market value at the time of receipt? So again, this is just you keeping, you know, records and evidence of the time that you received it, because they're going to need that to calculate the cost of the. You're going to need it to calculate the fair market value of the receipt at that time. Now, there's also software out there that will help you with that, um, I believe. But yeah, someone said I received the cryptocurrency that does not have a published value in an exchange for property or services. How do I determine cryptocurrency's fair market value? Man, you guys are coming up with some crazy scenarios. So you got cryptocurrency and there's no value on it on the exchange. At that point, guys, it's going to be equivalent to what the fair market value of the property is then. So let's say this is Eric coin, right? And I exchange Eric coin for a home. The home is worth $10,000. The IRS is going to say that Eric coin was worth $10,000. Pretty simple. If there's no value in it, it's going to be the value of whatever you exchange it for. When does my holding period begin for the cryptocurrencies that I received? That begins the day after you received it. Not the day of, the day after, like a regular capital asset, okay? Do I have income when a soft fork of cryptocurrency I own occurs? No, you do not have income when a soft fork occurs. If you don't know what a soft fork is, it's basically when, again, the protocol changes on the distributed ledger, okay? Um, and no new crypto is created. Pretty simple there. All right, let's take a look at the next questions. I got I receive virtual currency as a bona fide gift. Do I have income? Nope, you don't. It's a gift. How do I determine how do I determine the basis of my virtual currency that I received as a bona fide gift? Again, is it the time that it was disposed of or the time that it was given to you? Hope I'm answering that right. It depends on if you're going to have a gain or loss on it because there's situations where you might have, sorry, this light is bright. Situations where you might have like the person that's donated to you, it loses value. Uh, for determining it for the donor's side, um, you know, will determine if you have a loss or not. It's going to be equivalent to the fair market value. Sorry, I'm getting messages. What is my holding period for virtual currency that I receive as a gift? What do you mean your holding period? If you're asking what I think you're asking, it's going to be the day that you receive it as a gift. Okay, the day that you receive it, the day of, the day of. If you received it the day of, okay, as a gift. Another common question is, if I donate virtual currency as a charity, do I recognize that as income or as a gain or a loss? That's going to fall under, I think, section 170, gain or loss from a donation. Yeah. So yeah, if I donate, will I have recognized income as a gain or a loss? Yeah, you will. How do I calculate my charitable deductions when I donate virtual currency? I'm pretty sure that's going to be based off if it's when you donate the currency, if it's been more than 1 year, you're going to take you're going to take what you pay for it less the the price of it at the time you donate it, and you'll have the difference be what your donation is. Hope I'm answering that question correctly. It's going to be equivalent to the fair market value at the time that you donate it. Um, but if it was held more than 1 year, now if you held it for less than a year, your deduction is going to be less the cost basis of the crypto and the fair market value. But it's going to be the lesser one. So let's say you have your Bitcoin, right? You've been holding this for 3 years, and you want to give it to Habitat for Humanity. The time that you give them that Bitcoin, let's say you got it and it was $9,000 when you bought it, and the time you gave it to them it was $12,000. Your contribution is going to be the $12,000. But let's say you bought it was $9,000, and at the time that you give it to them is $7,000. Your contribution is $7,000. Pretty simple there. But now let's say if you brought it, you brought Bitcoin for $9,000 and you only held it for 6 months, you decide to donate it to Habitat of Humanity, your deduction is going to be lesser. It's either going to be, let's say you bought it for $9,000. 3 months later, you decide to give it to them for $7,000. And it's been less than a year. You're going to have to take the $7,000 fair market value at that time. Pretty simple. Okay. And yeah, that's pretty much those questions. And we'll have to recognize the gain in the income if I have multiple wallets, multiple accounts, holding virtual currency, and transfer from one to the other. No, you don't. If you have a Coinbase wallet and you have a Bitcoin.com wallet and you keep exchanging currency to currency over there, you don't have to report that. I own multiple units of one kind of currency, some of which are acquired at different times, have different basis amounts. If I sell or exchange otherwise, some of those units, currencies, do I have to be, which one is being sold and exchanged of? Well, this is a loaded question, man. Um, ultimately, he said, can I choose which units are deemed sold and exchanged or otherwise disposed of? Yes, you can choose which units are sold or exchanged and otherwise. You can't do that. It's kind of like thinking like the FIFO method, basically. That's what you're kind of referring to. First in, first out. Whole video on that. Deal with that later. All right. Excuse me. How to identify a specific unit of virtual currency? I guess. I mean, by your keys, basically, because the blockchain is a public record, so you can use that, and it should have like the date, um, and all other stuff of when the currency was like transacted. So it's a public key. You should have that as well too. It should be on the records showing that information. So you can kind of use that if you're not really good with keeping track of transactions. You can always search the blockchain. Okay. If you have no idea what I'm talking about, go research it. Um, but I think typically what they're going to look for is date and time the units were exchanged. They're going to look at the basis and the fair market value at the time it was acquired and sold, and they look at what was received, what property or what items or what happened, services was given at that time. That's how you identify the specific unit, and that's how they're going to look at taxing it. A lot of questions, guys. I think we're almost done. So, how do I account for the sale or exchange of the disposition of the units of virtual currency? I don't specify. If I don't specify specifically identify each unit, uh, kind of do it in chronological order. Like I mentioned, first in, first out. If you're not going to specify or identify the units, you're going to have to do for the FIFO method. Sorry, I was just watching the time. I engage in transaction involving cryptocurrency, but I didn't receive a pay statement information such as like a W-2 or 1099. Do I got to report my income, gain or loss, my federal tax return? Yep, you got to report that. Sorry, buddy. Um, yeah, you need to report that as accurately as you can. Where do I report my capital gains or loss from my virtual currency? On that 8949 form that I showed you in the earlier. And then if someone said, where do I report my income? Where do I report it as ordinary income? You do that on your 1040 under like a Schedule D, capital capital gains and loss. Pretty simple. All right. Last two questions here. Do I pay taxes on staking rewards? Hmm. So remember, crypto is taxed more than one way. If you receive it through like rewards and stuff like that, they're gonna look at that as income. And I'm assuming you mean like you're staking, you got rewards, and then you cash out on your rewards. Okay, it's something that hasn't really been, you got to question whether or not something has been consumed or used or traded for services, not just created. Okay, and actually, there was actually something that came out on that IRS rule, and I think in like Tennessee with this couple, the IRS taxed them on the rewards they staked on their which crypto was it? It was Trez. I forgot which crypto it was, but anyways, they were supposed to pay taxes on one of the cryptos that they were staking, and they never like cashed out the rewards that they earned, and the IRS gave them a refund. So that's pretty huge. They're basically saying you can stake your coins or your crypto and receive rewards from it and not be taxed on it. The question is, when do you get taxed on it? Okay, hope that makes sense. Um, Someone said, how do I calculate income if I provided services and receive payment in virtual currency? How do you calculate your income? You do it based on the time that you uh, receive the payment. Okay. Um, I have bought Bitcoin from US on Coinbase, which sales tax on sale. Can I sell Bitcoin to avoid taxes? You're going to pay international tax. Don't even try that. I get what you're saying, but yeah, you got to pay taxes on it. Even if you take it to a place that doesn't let you pay taxes, you're not going to avoid that. Sorry. Um, so lastly, guys, that's pretty much it. Hopefully that answered a lot of questions. Um, Here's my little tips and tricks on, and thoughts about this whole situation. Just really just pay your fair share. There's plenty of ways for you to, save money, pay less tax as much as possible. That's the way I look at it. We all gotta pay something, but it's up to you to try to pay as little as you can. Don't overpay, because they definitely won't give it back to you if you don't ask. All right. Um, from the looks of things and the way the world's changing, tax is here to stay on crypto. Doubt it's not going anywhere. So take advantage of all the programs you can. There's programs out there that will help you with any kind of tax liabilities. Um, be proactive when it comes to your taxes, you know, as much as you can. Don't be reactive, because the IRS is not the fastest of government agencies. So be as proactive as you can. Keep records as much as you can. And when it comes to different tips, I mean, there's programs and software out there that will help you with your records. Um, like brokers and exchanges like BlockFi, they'll give you programs like TaxBit for free to be able to calculate your taxes. But just kind of keep in mind what I was talking about earlier, as far as it could be a little inaccurate if you're transferring currency to currency, because they don't know your cost basis. The import they have like a lot of import data features with different programs like you know TurboTax and TaxBit. You can just easily import your taxable gains and losses by just logging into your exchange. So that's pretty cool. And then there's, specific programs like Zenledger, Crypto Trader, Bear Tax, Token Tax, Coin Trader, all those places that, you know, are programs that help you with tax records when it comes to, you know, dealing with your cryptocurrency taxes, because it can become confusing. If you trade it a lot, it can be a lot of transactions to have to go through. So those programs are there to help you out. But yeah, that's pretty much it, guys. So, be proactive when it comes to your tax situation. Don't be afraid of the IRS. You're not trying to avoid them just because you don't know, and they understand that. You're not Wesley Snipes. You're not Al Capone. So, you're not trying to deliberately avoid taxes, and you're not trying to not pay taxes on the criminal things you did. They don't care. They just want to, they just want you to pay your fair share. Because remember, it's not illegal, you know, whether you owe money or not. It's not illegal to owe money, but it is illegal to not file your taxes. It's not criminally illegal. It's just like civil illegal to do that. You can get it with, civil penalties, not criminal penalties. Okay. Again, you're not Wesley Snipes or Al Capone. So just keep that in mind, guys. File your taxes, get them done. If you owe money, it's all right. It's not the end of the world. Life will go on. There's things there to help you. So that pretty much does it, guys. I hope this video was a little bit helpful. Please like, subscribe, comment if you have any questions. Share it with a friend. If you know someone who might need this information, they can take a look at the situations in the video, see if it applies to them. Feel free to ask me some questions if you had. Again, hopefully this saved you guys hundreds, thousands, and just consultation fees that have to speak to, you know, a tax professional or a CPA or anything like that. But that'll do it for me. Um, you guys, some got to get back to day trading. It's after hours. Hopefully make some money. But that is pretty much it when it comes to this crypto stuff. Again, if you guys know anybody who might, want a Bitcoin ATM, let me know. I'll add it in there. But that's pretty much it for me. So hopefully you guys enjoyed this video. I will talk to you later. Stay green.